and wish you a very happy new year. Wish you a very prosperous and healthy life. At the same time, wish you also the great success in trading the markets. In today's webinar, we are going to look at what happened in 2022 and what is the outlook for 2023 and what can we do, both for investment as well as for trading strategies. Now let us look at the overall performance of 2022 December compared to 1 year back, compared to what happened 2 years back, 3 years, 5 years back, because that will give the confidence in investing in markets. Now we are going to take the overall the broad index, then also look at the bank Nifty and which sector has done very well in that. So let us look at the performance of Nifty 50 in 2022 compared to 2021, compared to 2020, 2019, 18 and 2017. Or otherwise what we look at is, instead of this, we can also look at what is the 1 year performance. 1 year, what happened? 2 years performance, 3 years and 5 years, because normally this is how the investor look at their investment. 1 year Nifty has given return of 4.4%. This is quite a great performance compared to what has happened globally. If you look at S&P index, S&P has fallen, that is US S&P, with which we have a very strong correlation, was down 19% in 2022 compared to 2021. If you look at the emerging market index, EM index, emerging market, that has also fallen by 22% approximately. So compared to these steep declines in S&P and emerging markets, we have performed 4.4% up compared to 2021. So which means still there is no negativism for the investor. But if you look at the 2 year performance, we have done even much better, and 2 year performance has been we have got a return which is 14% per annum. 14% per annum. 3 years has given again 16%, and 5 years has given 14% per annum. So if you look at a slightly higher time horizon, then we have got a result which is 14, 16 and 14% per annum. This is annualized. We could not have got this in any other markets. Okay, we could not have got this in most of the other markets otherwise. So this has been one of the best performing asset markets that we can say, and Nifty has performed exceedingly well. Now this is in comparison with the S&P, which is down nearly 19% in 2021. Now within this, what has been the major contributor to this particular rally, we have to see, because there are so many other sub indices which are there in this. Now let us look at bank Nifty. Bank Nifty performance, because bank Nifty has got a very good weightage. Now in index it is more than 35%. More than 1/3 of the index is contributed by bank Nifty. Then we have got the IT index, then energy, metal, then consumer, then pharma, all those things. Now bank Nifty in the last 1 year, 1 year performance in bank Nifty was 21%. Now compared to Nifty, which is 4.4%. Nifty is 4.5, 4.4. Bank Nifty is 21%. 2 year performance, bank Nifty has given return of 18% per annum versus 14% in Nifty. Versus 14% Nifty. 3 years, bank Nifty has returned 11% compared to Nifty of 16%. So in this horizon of 3 years, Nifty has done better. Then the 5 year performance, this has given, Nifty has given 14% and bank Nifty has given a return of 13%. So more or less not much of a difference. So if you look at it in 3 blocks of 1 year, 2 year and 5 year, bank Nifty either is almost equal to Nifty or better than Nifty. Only in a 3 year performance, Nifty has done better than bank Nifty. So the last 2 years, particularly the last year, the major contribution of this particular rally which has come in Nifty is because of the banks. So that means the EPS growth in Nifty is very significantly contributed by Bank Nifty. So if we exclude the Bank Nifty, probably the EPS would have fallen. Okay, so it is the Bank Nifty which has given that exceedingly high return in as far as Nifty is concerned, and it is expected to contribute in the same way in the coming year also, because of cleaning of the balance sheets of most of the PSU banks. So within that there are of course subsects like the private banks, then the PSU banks, and this year particularly the flavor has been the PSU banks. So if you look at the performance of the PSU banking Bs, it has done even much better than the overall Bank Nifty, mainly because of the weightage of the public sector banks in the PSU banks, which is purely the PSU banks, whereas in the case of Bank Nifty it also includes other stocks which are like ICICI, HDFC Bank, Kotak and all, Kotak IndusInd Bank and all. But there is always a risk of going in for any particular sector, because we never know which sector will do well, and more risky will be to go for individual stocks within that Bank Nifty also. So it is better that we look at to what extent we should be put our weightage in Bank Nifty, or we should put it in Nifty. Now those who are very conservative, okay, we have already highlighted previously that the index funds, passive index funds, is for the most conservative investor, and probably looking at multi-cap or some sectoral mutual funds, or even probably small and mid-cap or flexi funds could be suitable for higher and aggressive investors if they know that particular sector or the particular cycle is going to favor that particular sector. So those who do not want to take much of a risk can look mainly at the Nifty itself, which is normally gives a good return, which is something like you get 12% or so. Now question is what is going to give us the confidence? That is more important. Now if you look at the last 22 years, say approximately 2000 to 2022, nearly out of 18 years has been positive. That is on a December close to close. On a December close to close basis, 18 years has been positive. Only 4 years have turned out to be negative. Only 4 years have turned out to be negative. Okay. Now what should we really do in this particular case? So we have to make some presumptions about the likely direction. So for 18 out of 22 is a very good hit rate of something close to 80% of the time we are having a positive close in December compared to the previous December. So this December, what has been, we look at the chart this year, what is the close, what is it that probably we could expect, which will do it from both from the point of fundamental analysis as from technical analysis point of view, to know where probably what could be the floor in Nifty, what could be the probable targets for in the coming year of 2023. So those who are going to invest probably can look at whether that will give a good return, there is a good space, or probably there is a margin of safety for investment here. Those who are looking for trading can do also with great confidence once we reach certain levels. So we will highlight both these cases now shortly. Now let's look at the chart. So here let's put the 1 year chart, 12 months. You just see this is where we are. This is the 2001, right? So 2001, if you see only this particular year, one year, and in fact this is 2009. So okay, we'll take it from 2001 itself. Okay, 2001. This has been 2001 is negative. Okay, and 2008 is negative 2. Then 2011 is negative 3, and 2015. So 4 out of from 2001, which is 22 years, only 4 out of 22 years has been negative, and the remaining are positive candles. Sometimes the positive candle has been much higher also. So let us look at the possible thing both from the fundamental point of view as well as from the technical point of view as to where we can expect this market to head towards. Now let us look at the present earnings, because very large extent the market is guided by two factors. We have already highlighted two factors are very important for markets. One, of course, is the valuation, that is, which is based on EBITDA growth. How the EBITDA grows, that is, here in Nifty there are 50 stocks. So what is the composition of the Nifty, and based on that, what is the aggregate EBITDA growth of Nifty 50 stocks? One is the valuation, second is the liquidity. Valuation, the liquidity. Now, if you see the general EPS growth that is being projected is something like 15% per annum, 15% in this year. They are also looking at 13 to 14% growth in coming years. Now, liquidity, I think this is going to be a negative thing as far as market is concerned. Last year, that is 2021, was primarily driven by liquidity. Was primarily, that is, at one point of time when the markets hit a astounding high on the PE scale, that is on the price to earnings, which we have already explained. The PE of Nifty even went up to 41 or 42. Okay. Generally, even in a bullish scenario, it goes to 27, 28 like that. In a normal moderate scenario, it goes to 24 to 25. But whereas when Nifty was running heavy, it even crossed 40 at one stage. So there was very crazy valuations because of the extreme amount of liquidity that was available in the market. Now, if the central banks have started to raise rates, and last year has been one of raising rates, and this year also, the first half of this year, we could see interest rates still going up, and also the liquidity will be taken out of the market. So this will be a big headwind. So this is negative for markets. This is not a very great positive for the markets, but markets have already come down anticipating this liquidity withdrawal. Now the next is the valuation. Okay. So that will now, it has to be it has to come from EBITDA growth, and we have to see how the Nifty EBITDA is going to grow and how the EPS is going to grow compared to the previous years. Now, according to various estimates, they say that by March 2023, the Nifty EPS will be something close to 830. This is what the estimate for Nifty EPS is. This is 830. 830 is the Nifty EPS expected. Now, the market price is a function of EPS and PE. Market price is the EPS into the price to earnings ratio. Now this is, they say, 830 expected. We can dispute. Some people say that it is quite aggressive. Now this 830 itself is coming based on the banking sector performance. So we don't need to really put in some bank Nifty separately. If we do it in Nifty itself, it has bank Nifty. Okay. So 830 is the EPS, and the PE right now is around 21, is approximately 22. Presently, approximately is 22. That is how you get this 830 into 22, which is approximately 18,260 levels where it is trading today. Now, in this particular cycle of fall, which happened up to 15,132, there was a drop from 18,600 to 15,132 in last year. If you look at, let us look at the chart. So this particular level, which is 15,183, at that time the PE came down closer to 19 to 20 was the PE. Now this 830 is likely to come by next 1 or 2 months. We will have the 830 EPS should fructify by March. So if that be the case, the lowest PE that was traded during this particular correction, where the lot of issues which are there, because this came in June, Russia-Ukraine war, then we have the oil price going up during that particular period, inflation, liquidity withdrawal started, interest rate increase started. With all these things, we still got the PE, which is closer to the 19 to 20 mark. And if you look at the last 5 years, the lowest PE that has been traded is only this 19 to 20. So only during the pandemic, that particular month, we had the PE of 15 to 16 approximately, or 17 was the PE. But otherwise, we were always getting closer to this PE, which is approximately 19 to 20 being the lowest. So assuming 20 PE being the worst case scenario, so we expect this to be around 830 into 20. So this is going to be the bottom side, which is 16,600. So the fall, probably if something takes place, something goes a little wrong, that can be a 10% correction from here. There can be a 10% correction from here, and it can go down right up to 16,600. Probably we have to see some of the technical levels also to know Fibonacci retracement and all. So to what extent it can this one, because now let us say compared to June when the market was at 1920 PE, now another 2 quarters have gone, September, October, November, December. Now you're going to get another 3 months in the coming January, February, March. So that means if the earnings have to grow at 15% per annum, so the 3 quarters should at least get us something like 11 to 12%. So 11 to 12% from the 15,100 levels, 10 to 11% should put us around the 16,600 mark. So what is equivalent to 15,100 or 130 in June should in this March should correspond to a low of 16,600. That is what we are saying, because by that time compared to the June, our earnings have grown, and we are talking about this low PE there also. Okay, there's a low PE case of 19 to 20, and since then EPS should have grown, okay, at a rate of something like 3.5 to 4% every quarter if we had to achieve a 15% per annum. So that means we should, by this March, I think if at all there is a fall, I think the fall should get arrested closer to 16,600. 16,600. Now let us look at the what is the projection that could happen by December 2023, because December 2022 we have seen. So by December 2023, let us say what is the expected. Now when we are talking about something like the next year P, that is 24 P, that is FY24, they are looking anything not less than 950. 950. Okay. So if you are talking about 830 for March, then this 120 for one full year, okay, should translate approximately 30 approximately for every quarter, which means 3 quarters from 830 should result in something like 920 EPS by next December. So the 920, right now we are trading at approximately 22 PE. Right now we are trading at 22 PE. So let us look at 920 into 22. So this is a possibility of a target, 920 into 22, which is 20,240. So that is why most of them are saying that this market Nifty by December can be closer to the 20,000 mark, 20,240. If it is going to be very bullish, we have seen the PE coming up to 24, which we don't expect, mainly the 24-25 PE, basically because of the liquidity reasons. Liquidity is not going to be there. So extremely bullish scenario can come only if the interest rates are going to be cut. Okay. So we are not factoring something like a 23-24 scenario. We are factoring a scenario like what we are today. If that be the case, then in that case we should be getting closer to the 20,200, 20,240. And by next December, even if there is going to be a fall, the market should be 920 into 20, which should be something like the present rate, 920 into 20, which is 18,400, which is where the market ended this year. So we do not expect that. Probably, since we have said that 18 out of 22 years it has been positive, 18 out of 22 years it has been positive, there should be a value which is above this. So probably we could be heading towards the 20,200 or 20,300, which means it is 2,000 points from here. A 2,000 points from here could translate something like a 11% gain, right? So we could probably look at something like a 11% gain from here. So this year probably we could see something like 11% to 12% growth in Nifty index. Growth in Nifty index could be 11% to 12%. And also, if you look at the generally a 2-year performance, the average performance of 2 years has been something like 1.23. That is 2 years back rate into 1.23 is the average performance. That means 11%, 11.5% it is growing every year. That is what is happening. So 2-year performance should be around 1.23, and this year we have only got around something like a 4.5%, 5%. So which means compared to 2022 rate, which is 18,300, there's a chance that we could probably go up by another 18% from here. So that could be quite a bullish scenario. 18,300 into 1.18, which could be an average rate. So at 21,600 levels is something on an average a 2-year performance has been. Okay, so because 2021 if somebody had invested, by 2022 you got only return of 4.5%, right? 4.5%. So that has to get compensated, right? So that has to get compensated in the next year. On an average rate, I'm saying. So if that be the case, then in that case we should expect that probably we will be working something closer to, even in a bullish case scenario, getting it closer to 21,500 levels is also possible. And also we said that P can go up to 24 to 25 also sometimes if things are quite bullish, and with a 920 EPS into 24 could translate into 22,000. That's what we said. So probably this is a very good bullish scenario. This is a highly bullish scenario. The average of 20,000 is a moderate expected thing. This is a very high possibility. This is a very high possibility. The floor that is low could be something like 16,600 where it will take support, and it has to end mostly out of 80% probability. It should end above today's 18,300, 400, which is the December close. So we should be above that. So what should we do? I mean, like considering that the statistical scenario is 18 out of 22 till now has been positive. The only thing that we could do is wait for some dip below the 2022 December low. Okay, so December 2022 low is December 2022 close. So the close is this is the close, right? So 18,100 is the close. So if you get 18,100, 4 to 5% below that, get it. It's a very good thing, because normally even if it is going to close 4 to 5% above 18,100, we are still expecting something like a 9 to 10% if you buy below 5% below the 18,100. So if it drops by 1,000 points from there, let us say 17,100 to 17,200, I think it is definitely a great scenario to go for a buy. So the recommendation will be to look towards some sort of a buying between 17,200 to 16,600 for a move which could be 20,000, and take a profit which could be around 14% or so per annum return. So buying on dip is a good investment strategy as far as Nifty is concerned. Buying closer to 17,200 mark will definitely yield very good result. Will definitely yield very good result as far as the investment is concerned in this market. Right. So now let us look at from the technical point of view also. What are the this one? That is, let us say this year, we look at the pivot point high low also. 18,887, 15,183. 18,887, low is 15,183, close is 18,105. Okay, what is the average for this? Now 7 plus 15,183 plus 18,105. The average is 17,390. So somewhere between 17,390, it can come down at some stage, 17,390. And let us look at the S1. It is 15,900. S1 is 15,900. I don't think we should wait for this. I think this will be a good decent level, 17,400 to 17,200. I think around that level it can be bought. Okay. Now let's look at the R1. Minus 15,183. R1 is 19,600. R2, the difference is 18,887 minus 15,183 divided by 2. Okay, 3,704 plus 17. R2 is 21,100. So probably somewhere in between it can go, which that is what we said. It could be around 20,200, 20,300. So buying closer to this, and investment can go anywhere up to 20,000 to 20,200. That is between R1 and R2. That's a possibility. It's a possibility. So this is a very good scenario. And if you look at the other from the perspective of let us say Fibonacci, that is from the technical side, let's say this is a 18,604. So this is a major thing, 18,604 to 15,183. So approximately 3,500 points. So 3,500 points, if we put into 0.235, it comes to 822. So 822 plus this one, that is, so around first resistance will come closer to 19,400 to 500. 19,400 to 500. The second place will go into 0.386. 1,350. 1,350 plus, that is 20,000. So mostly we could expect this market to probably look towards the first resistance could come closer to 19,500. Then it may second resistance from Fibonacci can come closer to the 20,000. So this is our these are the scenarios with which we can work around for investment. Now this is as far as the big one is concerned, that is the Nifty is concerned. Okay, so those who are looking towards investment can look towards one-time buying if there is a fall. Okay, now also we'll look at the from the technical point of view also. Now okay, now this particular see this is the market is this particular angle is holding now, trend line angle is holding. In case if it has to fall below this also at this point of time, I think this particular line should hold. So which is now coming closer to on a weekly basis 17,400, 500 levels like that. So we should be looking towards this particular one, which is 17,400 to 500 should on any decline should hold. And this particular line is where probably resistances can come, because these are connecting to two important tops. So anytime it goes around that, those who are trading should be careful not to go for an investment somewhere here. Now of course these are all coming much higher, 19,290 to 19,300, 400 right now. So be careful as a matter of caution. Please do not go for an investment when it has already hit new highs. When it's already hit new highs, because there is always a tendency for the market to correct from those particular highs. So those who are investing definitely should wait for investment at a lower level, which is where we are putting around the 17,200 to 17,400 to 16,600 based on the parameters that we explained, that is the PE ratio and also the other fundamental factors like EPS growth, the EBITDA growth and all. Now also statistically we have explained that normally 18 out of 22 times it has been higher, so it should close above 18,100 on an 80% probability by 2023. So if you buy at 5% drop from previous close, or 4 to 5%, and then if it rallies even by 4 to 5% on the upside, you will get a decent return of at least 10 to 11%. So definitely if there is a panic reaction and the market falls, welcome it and go for an investment. Those who are traders, now it depends on how you view it. Now those who are looking at stop losses should not look towards putting a stop loss on a weekly pivot point cut at all, because by the time it cuts it and falls, immediately there will be a revival and you will find it very difficult to go for a catch. Now at this point of time, for those who are trading, generally speaking, this is low which is below this particular low, right? So if it is going to cut any weak low, any particular, because then we are now assuming that we are if any low is cut, then in that case we are going to have a lower top and also a lower bottom. A lower bottom has been already formed here. This is a low, this is a low, so a lower bottom has been formed. So in case if we have fall below any particular weak low, then in that case we need to be quite careful, because it can drop down a little more down in that, because now we are having a lower bottom in weekly chart, and if you are going to have a cut below any particular weak low, then in that case we will also have a lower top, which means technically on a weekly chart it can become bearish, and daily chart also it can become bearish. Only thing is that on a monthly chart it is still positive, because in a monthly chart we have seen, let us say, so in the monthly chart, this low has to be right now. This particular month is going on right now. January has just started, so it can probably go for a fall. But generally, as we said, Nifty, it doesn't go much below a 3-month low, which means we do not expect this particular low to be cut. So this particular low is just 16,855. So very rare that probably we'll have 16,855 to be cut. That means this particular low, which is 16,747 itself, may not be cut. So that is our view. If that be the case, then in that case, if already a top has been formed, let us look at the Fibonacci from this particular line, from this particular place. So this time it has come up to 38.2% retracement, right? It has come up to 38.2% retracement. Now it could probably drop down to it came up to 50% retracement. So a 50% retracement, now the next resistance can come closer to 18,400, 18,392 or 18,400 is one place, or probably it could head closer to the 18,500 to 600 before it can correct a little lower also. Now in this particular case, we have to look at 17,556. I think that will be a 61.8% retracement. So if there is a fall which is closer to 17,550 to 17,200, that is where I think the yearly pivot also comes, which is a very good place for going for investment. So in this month itself, if you get a chance of correction towards the 17,555 levels, definitely you should go for investment as far as the index is concerned, and do it without any hesitation. Okay, because from there is a chance that it will pick up again. Even if there is going to be a further, there will always be exceptions, conditions where probably some new developments that take place, which could probably put the market in a much more greater negative territory. If that be the case, you should back it up with some more investment, because Nifty, if the EBITDA growth is going to grow something like we will not look at the individual sectors which are contributing to the Nifty. Overall, if Nifty is going to get around 13 to 14% EBITDA growth or EPS growth, and if we are getting at a valuation of P which is closer to the 20 levels, we should definitely go for any buy. Okay, so at 20%, 22 becoming 20, the present P is 22. If it is going to come to 20, there has to be a 10% correction, which is something like 1,800 points, which is 16,400 levels or so. And that situation we don't expect immediate, generally speaking, because very rarely you will see Nifty breaking a big 3-month low, and so we could probably expect this pivot also, because this is a monthly pivot also. If you see, this is a monthly pivot also. So because of this monthly pivot, we don't expect this pivot low to be cut, because if you see, in many cases a monthly pivot low generally is not cut. Even if a 3-month low is cut, monthly pivot low is generally not cut. So only in a case of, say, in a pandemic situation like this, there was a chance, it cut. Okay. So only in a pandemic situation, we saw generally, the market going down, or there should be some important events. Okay. So once a pivot high is cut, we have not seen that pivot low being cut. See, for example, this was a pivot high 11,794, and after that, if you see, the pivot low here also was only here the pivot low was cut. And after that pivot low is cut, there was a fall for a couple of 1, 2, 3, 4, 5, nearly 5 months of fall was there, and then it started to revive. So once this trend line was broken, we are on the upside. So generally speaking, if the market is going to be good, we should not expect much below 16,747 or so. So a Fibonacci drawn from that particular angle should hold, which means 17,550, 17,560 should be a good enough place to go for investment. Worst come is 17,200. So with that, we should looking towards a greater high, which we put in the Fibonacci thing also, going closer to the 20,000 mark. Now same thing if you look at the Bank Nifty. Let us look at the Bank Nifty, and in Bank Nifty also let us look at the of course the pivot points are very quite far off in these cases. So let us look at the if at all it's going to correct from here, because last month was slightly down, so we had a 23.6% correction from this low, closer to that, right? So the correction could probably bring it down to 39,593, which is a 38.2% retracement, because if it is going to fall from here, then Bank Nifty could correct itself by 39,593 levels or so. So that will be a decent point, decent place where we can look towards buying Bank Nifty for a higher level again, because if Bank Nifty is not going to perform, Nifty has no chance of performance, because most of the profit contribution in this time in Nifty has come from Bank Nifty. So definitely we should be confident enough to buy as far as the bank is concerned, Bank Nifty is concerned, on some correction. Now it is already 44,000. 44,000 going to 39,593 itself, it should be more than 10% correction. It should be more than 10% correction. And a 10% correction at this point of time, with the EPS growing, I think it is more than enough. Okay, so there must be a lot of so that is the reason why when you look at some fundamentals, then in that case you get confidence to buy, and buy at what levels. So that buying at what levels can be decided by technical levels, which is where probably you can use a Fibonacci or pivot point or whatever that you are familiar with it. You can use some of that to do the analysis here. So this is Bank Nifty as far as concerned. So wait for this particular year to look at some sort of a retracement. If at all a top has been made, maybe 39,593 can be a level where we can look towards making an investment. So now also let us look at the see. So this is the angle of ascent right now. So anytime it goes very closer to that point, be careful, don't go for an investment. Wait for a pullback, and let us say this pullback, okay, can come to these places where I'm keeping the trend lines. So those are the places where probably it can come up to that place. So here let us say this is a big one. So expect that probably the last month low itself can hold. That is the last month low itself can hold. That is the 41,569. That itself is a is going to be likely to be a very important low. And the chances that if it is going to break that particular high 44,151, then we are going to see a much greater decisive move on the upside. So I would suggest that no, you can even look at 41,569 in Bank Nifty to add positions, and also to buy in case if there is a slightly bigger drop towards 39,590 levels. So these are the two places where you can look towards going for investment. Now I'm not going to touch on the basically on the immediate that is a day trading strategy or a position strategy for next week also, which will come back again probably in coming weeks. Right now we are only looking at what happened in 2022 and what is likely to be the strategy for 2023 for investment. And also, if you are going to be a trader, you can do with great confidence. Trading means different because it could be in the futures market, it could be in the cash market. So if you are going to invest in the cash market in terms of Nifty ETFs, which are there in your trading screen, then you can look at investment at every 200-300 points down in Nifty, because you can't invest in one day at 17,500 or 17,200. So make it a point to invest at every 200 points fall in Nifty. If it is 18,200, 18,000, 17,800, 17,600, 500. So try to do it at every 200 points low. You will definitely have some sort of an average at the bottom from where you will get a good return. Similarly, you can do it as far as Bank Nifty also is concerned. Generally, the US markets, they are not very, they are not looking that sound right at this point of time. Let us look at the US market. Of course, it is not open today. We have to wait for some more time. At this point of time, the US market has to climb a little. It has to cross this particular high, because now let us say see, this was the previous sorry. So this is the low, high to low Fibonacci, and the high to low Fibonacci we have got closer to the 4150 levels, which should not be taken off, and it came closer to the 4110 levels. So if it is only going to cross this particular high, which is the this particular high, which is the 4100, then probably we can say the markets have turned around, which means if US market is going to become bullish, I think we are also likely to perform much better. And since the US market dropped nearly 19%, there could be a very good gain as far as the market is concerned in US if 4100 is going to be, if 4100 is going to be taken off, 4100 is going to be taken off there. So we are looking at right now the last month has been quite negative as far as S&P is concerned, and right now we're waiting for some important developments like FOMC minutes tomorrow, then US employment data to come again on Friday, then February meeting of Fed. All those things will decide. At some stage that Fed will also go for a pause as far as rate hikes are concerned, and that probably could be the time when markets can rally. So expect the rally probably to start in the second half of this year, generally speaking, from the economic point of view. Then of course the global and other developments can play its part. So we are, only thing is that at present Indian markets, because we are outperforming as far as the economy is concerned compared to rest of the markets, rest of the global markets, I think we are getting a decently higher valuation compared to S&P by more than 10 to 15%, right? And that explains that why Indian market is outperforming US market as well as EMI other markets also. And that is to a very large extent has come from PSU banks whose balance sheets have been cleared, and also because of the credit growth. And the December reading of manufacturing data in India also has been quite bullish. It is at a 2-year high. GST collections is good. So overall situation in India seems to be much better compared to the rest of the global markets, and we are getting a premium because of that. So if things go well, if things go right at this, we should be looking at 12 to 14% year-on-year return in this particular year. So with this, I am concluding for the day. So if at all you have any question, you may please ask now. Thank you very much. So thank you very much for your participation today. We will see again on Friday with the performances in commodity markets in 2022 and what we could expect in 2023. Thank you very much. Good night.